the discovery of the COVID-19 ushered in a forced change on the nations of the world and the nation of South Africa, the education system to be particular. So now with this change that is forced upon our lives, we are expected or demanded to respond to the change and support our president and our minister, the call to save the academic year and to save lives. We want to appreciate the initiatives that the Mpumalanga colleges, KZN and Northwest colleges have taken to bring into life television lessons, and we want to appreciate our ministers, the cabinet and the presidency for allowing us to bring teaching and learning back to students. We want to appreciate our councils as well for approving the budgets so we can continue to run our NCV and our Report 191 programs from your homes. I want to encourage our students in different parts of this nation to go on television and watch lessons from the NCV syllabus and the Report 191 so they can prepare themselves for their coming assessment and save the academic year as much as we desire to save life. Thank you very much.
Greetings, viewers at home. I'm Kuna J from Ehlanzeni TVET College, stationed at Mlumati campus, under a program called Finance, Economics and Accounting. I'm lecturing a subject called Applied Accounting, Level 4. So today we are going to do topic 3, which is financial statement. I remember within our first lesson, we did income statement. Then today we're going to do balance sheet. Then, what is a balance sheet? A balance sheet, it's a financial statement which is used to determine the financial position of an organization or business. So each time when you do a balance sheet, you need to remember the accounting equation, which is asset. It's equivalent to owner's equity together with liabilities. That means your assets or the assets of the business must be equal to the liabilities combined together with the owner's equity of the business. Our lesson needs the post-adjustment trial balance. What is the post-adjustment trial balance? It's a trial balance that is prepared after preparing the income statement or after doing the adjustment. So here you are given only the post-adjustment trial balance. Then from there you need to prepare the balance sheet. Unlike in the income statement where you will be given the pre-adjustment trial balance together with adjustment. So now we don't have adjustment, but we might see figures from the adjustment there and there, but not to do the adjustment per se. Then here it's our structure that will assist us to complete our balance sheet. So during examination, you'll be given a blank answer sheet. You need to write the balance sheet from the scratch. Remember, as I said earlier on, balance sheet is all about assets versus owner's equity combined with liabilities. So the first portion of our balance sheet, it has to do with asset. Remember, we've got two types of assets, non-current and current asset. So the first portion, it's about non-current assets. Within the non-current assets, we have property, plant, and equipment. That is note number 1. So when you prepare the balance sheet, you will spend most of your time doing notes. In the balance sheet, you just transfer only the totals from the notes to the balance sheet. So here it's our notes. What we need to do with our notes, we'll take the figures from the post-adjustment trial balance. So we've got vehicles and equipment under the property, plant and equipment. We don't have land and building or property. So according to our pre-adjustment trial balance, the value of vehicles is 89,885. For equipment, it's 59,778. Then we need to indicate our accumulated depreciation. So according to our post-adjustment trial balance, we've got 23,161 for depreciation. And this depreciation is split into two. The first one, which is 17,977, it's for vehicles. Equipment, it's 5,184. What we need to do with these figures, we need to take that one off vehicles and add it together with the accumulated depreciation on vehicles from the previous year. So if we're doing the ledger accounts, we'll take that one from the pre-adjustment trial balance plus the depreciation for the year. Then at the end, you'll be left with your accumulated depreciation for the current financial year. So in this case, we'll take the accumulated depreciation on vehicles, which is 55,938, plus the depreciation for the year, which is 17,977. Then the accumulated depreciation on vehicles is 73,915. Then for equipment, again, we take the accumulated depreciation on equipment, which is 25,218, plus depreciation for the year, which is 5,184. Then our accumulated depreciation on equipment, it's 30,402. Then we need to determine the book value. How do we determine the book value? We'll take the cost price less the accumulated depreciation for equipment and for vehicles. Then book value for vehicles will be 89,885 less 73,915. That is 15,970. Then book value for equipment, it's 59,778 minus 30,402. Then the book value, it's 29,376. From there, we need to get the total for each and every column. We've got 3 columns: cost price, accumulated depreciation, book value. Then we'll add the cost price figures together. It's 89,885 plus 59,778. Total cost price is 149,663. Accumulated depreciation, it's 73,915 plus 30,402. Total, it's 104,317. Then book value total, it's 15970 plus 29,376. That is 45,346. Then we transfer only this total to the balance sheet. That is 45,346. Then it goes to the balance sheet as from note number 1 under property, plant and equipment, which is 45,346. Then we are done with our property, plant and equipment. We move to the second portion, which is other financial assets. Under other financial assets, we need to check from our post-adjustment trial balance if we do have investment or fixed deposit. If we do have both, we record both of them there. But if we've got one of the two, we record whatever that is available. In this case, we've got investment with TMC Bank, investment with TMC Bank. The investment amount according to the trial balance, it's for 20,000. Then we are done again with the other financial asset. So we need to add the two together. That is 20,000 plus 45,346. Then the total goes to non-current asset. That is 65,346. So we are done with our non-current assets. We move to the second part of asset, which is current asset. Within the current asset, we'll start with stock. Then we need to prepare a note for stock. According to our pre-adjustment trial balance, it says stock on hand at 63,249. 63,249, it's our stock on hand. Again, we've got stationery on hand. If you can check there, we've got stationery on hand, that is 348. Stationery on hand is 348. We add these two together. It's 63,249 plus 348. Then we get 63,597. We transfer this one to the balance sheet from note number 2. Stock is 63,597. Then we move to the next item, which is trade and other debtors. Trade and other debtors, what we need to do with trade and other debtors, from the post-adjustment trial balance, we'll take our debtors control. We need to prepare a note for that. Then it's debtors control amount, according to the post-adjustment trial balance, it's 9,500. Then, what we need to do, they showed us here that we've got a provision for bad debt, which is 175. I mean provision for bad debt adjustment, which is 175. At the same time, we've got provision for bad debt, which is 650. Then we need to subtract these two. It's 650 less 175. Then the difference between the two will be 650 minus 175. It's 475. Then we take this 475 here. It must be subtracted from the debtors control. According to our post-adjustment trial balance, we've got prepaid expense. The prepaid expense, it's for insurance, and the amount of insurance, it's 2,000 rand. So we add the prepaid expense. If we had accrued income also, it will be added here on the trade and other debtors. But in this case, we don't have accrued income. So we'll say 9,500 minus 475 plus 2,000 rand. Then the total, it's 11,025, which is the total for trade and other debtors. goes to our balance sheet as it is, 11,025. Then the next item on our balance sheet, it's cash and cash equivalent. That will be note number 4 on our notes. What we need to do, we go to our post-adjustment trial balance and check for bank. The bank amount, according to our post-adjustment trial balance, is 2,399. Then we add the petty cash, which is 300. Also, we add the cash float, that is 250. Then we add the 3 together. It's 2,399 plus 300 plus 250. Then the total is 2,949. That is our total for cash and cash equivalent. That is 2,949. Then we add the 3 together, which is trading stock or stock, which is 63,597 plus 11,025 plus 2,949. Then the total is 77,571, which is our current asset total. So earlier on I said stationery is 348, while it's 384. You need to rectify that so that we can get the correct figure at the end. So if you can check, our stationery total or our trading stock total will be 63,633. Then you add it up together with your trade and other debtors, cash and cash equivalent. Then you get 77,607. Then in order for us to get the correct total assets now, we'll say 65,346 plus 77,607. Then our total asset is 142,953. Then we are done with the first portion. We move to the second portion, which is equity and liabilities. Then within the equity and liabilities, the first thing that we need to write it under this section, it's capital, or you can say it's owner's equity. It's one and the same thing. Then we need to prepare note number 5. According to note number 5, we need 3 things from the from the post-adjustment trial balance. We need the capital at the beginning. Capital at the beginning, it's 61,000 rand. Then we add our net profit. According to our post-adjustment trial balance, it shows a profit of 25,671. 25,671. Then we need to subtract less the throwings from the post-adjustment trial balance. Throwings amount is 12,493. We put it inside bracket so that we can see that we need to subtract it. It's 61,000 plus 25,671, which is our net profit, less throwings, 12,493. Then the total, it's 74,178. That must be transferred to our balance sheet, 74,178. Then we are done with the first portion within equity and liabilities. We move to non-current liabilities. Our non-current liabilities, we've got only loan from A AKS Bank. It's loan from AKS Bank at 25% per annum. Loan amount, it's 50,000 rand. 50,000 rand. Then the last portion, it's current liabilities. Within the current liabilities, we need to prepare a note called trade and other creditors. Then we'll take our creditors control from the post-adjustment trial balance. Creditors control amount is 12,182. So here on this note, we need to add the income received in advance as well as accrued expenses. So we do have an income received in advance, which is for interest received. Amount at 600 rand. Interest received in advance at 600 rand. We add also accrued expenses. According to our post-adjustment trial balance, we've got 2 accrued expenses. One, it's for interest on the loan and water and electricity. For water and electricity, it's 993. For interest on the loan, it's 5,000 rand. So we'll add these 4 together. It's 12,182 plus 600 plus 993 plus 5,000. Then the total, it's 18,775. So we go back to our notes and write trade and other creditors. Note number 6. Amount, it's 18,775. 18,775. Then we need to add the 3 figures together. That is 74,178 for capital plus 50,000 for the loan plus 18,775. Then the total, it's 142,953, which is our total equity and liabilities. So if you can check our equity and liabilities, indicate an amount of 142,953, as well as our total asset, it's the same amount, which is 142,953. That means it has balance. So we have achieved our goal. Each time when we prepare the balance sheet, at the end, the total assets must be the same as your total equity and liabilities. I hope this lesson will help you. For more information, you can visit our website page, www.ehlanzenicollege.co.za, our Facebook page, Ehlanzeni TVET College, or Twitter, which is at Ehlanzeni TVET, or you can visit our YouTube page, which is Ehlanzeni TVET College. Thank you.
The COVID-19 pandemic has a serious impact on the college system. It has reduced the interaction between the students and the lecturers, hence affecting the academic year 2020. We are now forced to look into the alternative methods or ways of increasing interaction without violating COVID-19 regulations. This includes broadcasting on TV, radio, and using other social media platforms. students are encouraged to use all the platforms made available so that we can save the academic year 2020. Working together, we can beat this. #Save lives, #Save the academic year 2020.